All right, just logged you guys both in my phone with that 702 number I gave you. So that is my personal cell. So if you guys ever need to get a hold of me, whether it's like tomorrow or years down the road, if God forbid we got to file a claim, I'm your guy.
Hello?
Hey, David.
Yes, sir.
Hey, David, this is Alex. And I was just giving you a call back about the mortgage protection cards you've been getting in the mail recently for your.
Yes, and I've been basically playing phone tag with y'all
Oh, is that right? Okay.
first a couple times and gotten automated calls or automated deals.
Got it. Well, hey, I'm a real life human here, calling you about that. So you're over at the 610 Ingram Street, right?
Say that again?
610 Ingram Street.
Yes, 610.
Cool. Okay, perfect. Awesome. Yeah, let me just verify a couple quick things here and we'll kind of answer some of your questions. I got your age down here as 25. Is that accurate?
That is until November. Yes.
Until November. Okay, cool. Are you a first time homeowner?
Yes, sir.
Awesome. Congratulations on the place, man.
Thank you.
And I see here you got a co-borrower as well. Is that like a spouse, girlfriend, wife?
Yes, my wife.
Wife. Okay, awesome. And mortgage amount, bless you. Mortgage amount I see here, I got about 164,000 through Mortgage Solutions.
163 is the principal.
Okay, principal, got it. Okay.
If I'm not mistaken.
Cool. That's what I'm seeing here through Mortgage Solutions of Colorado LLC. Is that correct?
Yes.
Okay, cool. And I'm assuming you and your wife, when it comes to finances, you guys make financial decisions together, just like my household. Is that right?
Yes, that's correct.
Okay, gotcha. Well, they got us doing everything virtually now, David. So it takes about 15 minutes to kind of knock it out and go through things together. Is your wife home right now or is she working?
Yeah, she's in the same room as me.
Cool. Well, hey, if you guys want to go grab a pen and paper and just kind of let her know that this is the mortgage protection guy on the phone and put me on speaker, we could knock this out real quick. So go ahead and grab that and just let me know when you guys are ready.
All right, you are in speaker. Michaela, can you hear? This is the mortgage protection guy. And we're ready to write it down.
Awesome. Hey, Michaela, I'm Alex. How are you? Good. Congratulations on the being first-time homeowners. It's a big deal. So congrats to you guys. And so obviously this is your first time looking into mortgage protection because you guys are first-time homeowners, right?
That's correct.
Cool. What were you kind of hoping that mortgage protection would do for y'all? I know there's a lot of, people have their own ideas of what it does. What are you guys kind of hoping that this will do for you?
My big thing is if something happens to me, I want it to basically leave her owning a home and like if some freak accident were to happen, I were to die, I want her to have a home.
I love that. Okay. Are you the sole breadwinner in the household, David, or does Michaela work as well?
I am.
You are.
I am.
Sole breadwinner. Okay, cool. Well, we could definitely kind of look into that. Do you guys right now have any kind of like life insurance in place through work, outside of work, anything like that?
Yeah, I have I have a policy through work. I don't remember if I had to do a doctor's visit to get the policy I chose. Either it's the basic one, which is just like 40,000, or it's like 180,000. But I don't know if I had to do a doctor's visit to get that one. But I do have life insurance through work.
Through work. Okay, gotcha. Cool. Do you know the biggest difference between I know this isn't specifically a life insurance talk today, but do you know the biggest difference between life insurance through work versus private coverage outside of work, or no?
Not exactly, other than no.
Cool, no problem. Hey, I'm 27, you're 25, so this is all kind of new to us, so I totally get that. So life insurance through work is super duper convenient, usually really cheap or free altogether, but it's kind of like a company car where as long as you're at the job, you get to keep it. And God forbid, if something happens to you and you end up, not working at that place anymore, the company takes the work coverage back, right? So that's why when it comes to things like life insurance, mortgage protection, you guys are definitely under, the right mentality, wanting to take control of that yourself privately instead of depending on someone else. So you guys are definitely in the right frame of mind, long story short. So let me kind of explain how the programs work and how I can help you out. I work with over 26 different companies. So I'm a broker. I get to kind of shop around on your guys' behalf. With you guys being so young, it's going to be inexpensive either way, which is nice. This is the right age to get it set up, because I talk to people all their time in their 40s, 50s, and 60s, and they wish they got it set up in their 20s and 30s, right? So, but essentially the plans, depending which plan we look at for you guys, they would take care of the home, not just if you pass away, but also if you were to get like a serious illness, such as like cancer, heart attack, stroke, at our age, more than likely, if it was serious, it probably would be cancer, right? Or permanent disability. So let's say you had a freak accident at work and you actually didn't pass away, but you end up having to go on permanent disability. You can never work again the rest of your life. That's a pretty bad situation financially, right? No income in the household. So in this case, the mortgage protection would kick in as well to take care of the mortgage. That way you guys don't have to worry about losing the house. So it's not strictly just a life or death. It's serious illness, permanent disability, or death is kind of what mortgage protection covers. Does that make sense?
Yes.
Cool. So in order for me to figure out of all the different plans, which one makes the most financial sense for you and Michaela, I do have to ask you guys a couple quick health questions. There is no physical exams or anything, but any kind of insurance plan, there's always going to be a little bit of some health stuff taken into account. And then I'll also ask you guys a couple of financial questions. After that, we'll go over some quotes together. And once the two of you sit down here and figure out which plans make the most sense for your guys' household, then last step is to submit an application over the phone. It takes about 10 to 15 minutes, and we'll get an instant approval or an instant decline. So you guys aren't going to be sit there waiting for weeks and weeks and waiting to find out. And then any plan that is applied for today, once you get approved, you guys do have 30 days to make any adjustments to the policy. So let's say you guys get approved for a plan today, talk about it, sleep on it. You want to move your coverage up, you can do that. Move your coverage up, you can do that, as long as it's within your 30 days. But we will at least get something submitted today to make sure you guys can actually get approved. So does that sound fair to y'all?
Yeah.
Cool.
Sounds good.
Cool. All right. Well, before I start poking and prodding you with a bunch of questions, I want you to get my name and my license number, so you know you're dealing with a licensed professional. So my first name is Alexander. Alexander.
Right, Alexander.
Last name, I'll say it and then spell it for you. Last name is Strate, and that is STRATE. Strate.
STRATE.
That's it.
State with an R.
State with an R, yeah. If I say that up front, though, people don't get it. So now you get it, though. And then my license number is 1881247. If you could just read that back real quick.
1881247.
That is correct. Yep. I just like to give that to you up front. I don't legally have to, but whenever you're dealing with sensitive information over the phone, you shouldn't just be giving that out willy-nilly. So I like to make sure you guys have that up front. So
sure. Let's
go ahead and dive on in, look at your guys' health over your lifetime. Any major surgeries, ER visits, hospitalizations, anything like that in your lifetime for either of y'all?
I have not had any major surgeries, ER visits, or anything like that. Michaela? Can you hear
her? Not too well, no.
She said she's had 2 surgeries.
Okay. What are those?
Her adenoids taken out and tubes put in her ears.
Okay.
That was childhood, I believe.
Gotcha.
She was 3 years old. Early 2001.
Early
and
2001.
And another one's more recent. She had a C-section.
Gotcha. Oh, so you guys have your first child as well?
Yes, sir.
Congratulations. That's awesome. Okay, and C-section, how long ago was that C-section?
That was this March.
Oh, wow. So newborn in the household. So new house, new baby. You guys are like kicking off life, yeah?
Yes, sir.
Love it. Love it. Okay. Cool. So C-section in March. Were there any complications with the C-section, or was it a smooth pregnancy, smooth birth?
That was smooth. As far as C-sections go, it was smooth. It was all clear skies.
Good to hear. Okay. So they got you taking any sort of medications, either of y'all, for pain, blood pressure, anything at all, or no medications for either of you guys?
I'm not taking any daily medication or anything like that.
What about for Michaela during the pregnancy? Did she get prescribed anything, or is it all
like prenatals and vitamins and stuff?
Okay.
She was on pain medication for a few days or a few weeks after the C-section.
Okay.
Yeah, she stopped taking. She was on hydrocodone for about a week after the C-section.
Okay. Hydrocodone for about a week. Okay, cool. Totally understand. You just birthed a human. Motrin. So, what was that last one you said? I'm sorry.
Motrin.
Motrin. Okay.
For the same amount of time, love, or same amount of time.
Okay, for about a week. Okay. Gotcha. Hey, totally understand. You literally just birthed a human, so makes sense. Alrighty. And then anything else medically that might pull up in your guys' records, or does that pretty much sum it all up?
She has asthma.
Asthma. So do I. Do you have an inhaler as needed, Michaela? Really hard to hear that, David. I'm sorry.
He said she hasn't had to use it in a really long time, but she does have one.
Cool. Gotcha. Same thing for me. I don't think I've used it since I was a teenager, so it's been almost 10 years for me. So, and then by the way, David, what is your exact date of birth?
11/20/1996.
11/20/96. That's cool. My fiance is 11/11/96. So there you go. And then Michaela, what's your date of birth?
9/1997.
9/1997. Wonderful. Okay. Any tobacco use for either of y'all, or no tobacco?
No.
Good. And then any problems or run-ins with the law, DUIs, felonies, anything like that?
No.
Cool. Then
is there anything you need to tell me?
Didn't escape from prison or on the run? No? All right. And then shifting gears here, looking at finances a bit. David, you said you're the sole breadwinner in the household. Michaela's got the full-time mom job. Is that right?
Yes, that's correct.
Cool. And David, what do you do for work?
I am a security guard for a, I don't know. No, you wouldn't know what the company's called. I'm a security guard for, cool. Do you need to know what kind of company it is?
All good.
Just need to know that I'm a security guard.
Security guard, rock and roll. It's good. And
I'm also a licensed minister. And so that's two income sources there.
Cool. And so kind of just ballpark, if we're looking at take home monthly income, like what you see after taxes and everything, by how much you got coming in every month. Let me
do some math real quick.
Yeah, no problem.
I think so. Okay, let me just look at it in my head. Yeah, roughly 3,500. I've recently had a title change, a bit of a kind of a promotion at my security guard job. So that's actually going to bump up a little in the near future, like within 2 weeks, but I haven't seen that money yet.
Okay.
So I can't give you a ballpark on that. So yeah, about $3,500 a month.
Okay.
It's a good ballpark take home.
Gotcha. Cool. And then no source of income for Michaela right now, right?
That's correct.
Cool. And then let's see here. All right. And then do you guys bank with a bank or a credit union?
A bank.
Bank. Okay.
We currently use Bank of America. Do you need to know what bank we use?
When we set up an application, they are going to ask for a payment method. Obviously, we won't get that far if you guys don't like the prices, but if we find a plan that you guys like, and I'm looking at some quotes now, I think you guys are going to like the prices. That is something that they'll need to set up the insurance if we end up getting approved. So, and then looking here, let's see. And then for the mortgage, is it a 30-year loan?
It is.
Okay. And what's the monthly mortgage payment?
11 something, like 1130, 11.
Okay.
50, somewhere in that zone. I want to say it's like 1135, 1136.
Cool. And then
it could be it's the first two digits are ones. I don't remember the last two digits.
Cool. It's close enough. Okay. And then do you guys have a goal, or have you guys talked about wanting to like try to pay off the home early, or are you just kind of figuring things out?
So we have a goal for where we want to be in 10 years, but we are not sure what role the house we're living at now is going to play.
Understood.
So we, our goal in 10 years is to be moved out of the city and into a country home. We don't know if the place we own now is going to be sold, or if it's going to stay ours and become a rental property. We're not sure on that front yet.
Understood. Cool. Good. Definitely appreciate the transparency you have there. David, if you had to kind of ballpark your annual income, I know you told me your monthly take home, but annual income between everything, probably around 50, 55 a year.
Yeah, that sounds right.
Okay.
That sounds right. Yeah. Because my security job is somewhere in the 35 zone. Not take home, but 35 zone, and then I don't know, it'd be higher than that. Sorry, I'm thinking out loud. Right. Yeah, somewhere in the 30 to 35 zone, and then the other job is about 20 before taxes.
Okay, cool. Okay. All right, so then let's get into some plans here. Obviously with you, David, being the sole breadwinner in terms of priority and who's going to have a little bit more insurance on them, I'd probably recommend you. Not that if something happened to Michaela, it wouldn't be devastating for you, but financially, it would probably be a lot more financially impactful if something happened to you, David, versus if something happened to Michaela. No offense, Michaela, but I'm sure you understand.
No.
Cool. So what I'd recommend then, and obviously we'll have to submit an application to see if we can get you approved for this, but I'm going to recommend what's called a cash back plan. If you want to write that down, cash back plan with living benefits. Cashback plan with living benefits. Okay. So the way this works is it's going to be from anywhere from 15 to 30 years. You get to choose either 15, 20, 25, or 30 years. They all have different prices. So we'll go over the prices once you kind of understand the plan works. But essentially, during those 15 to 30 years, you are covered for not just death. It's not just life and death, but it's also because of living benefits, like I mentioned earlier, that serious illness, so cancer, heart attack, and stroke would also be covered for the full mortgage amount, and permanent disability would be covered for the full mortgage amount. And permanent disability can't be like, ow, I bumped my knee. It has to be like, you can't use the bathroom without assistance. You can't eat without assistance. It'd have to be life altering, right? Sure. Which obviously we don't wish that on anyone, but stuff happens, accidents happen, right? So cancer, heart attack, stroke, permanent disability, or death, the entire mortgage is paid off. And if nothing happens during the entire 15 to 30 years and you guys live a totally normal life, at the end of the policy, you guys get 100% of your money back. So that would be like having a car insurance plan where they said, hey, if in 15 years you haven't had a car accident, we'll give you all your money back for your car insurance. It's kind of just like that. You live a normal life, you're a low risk person to the insurance company where you don't have to file a claim ever, which is good because that means you live a normal life. They give you all your money back. So it kind of acts like a forced savings account. Does that make sense? Yeah. So this is what we usually recommend. Yeah. So this is what we usually recommend for, people that can qualify for it. It is the most strict underwriting, but David, based off what you told me, you said you have absolutely nothing going on. We'd have to obviously check that, but assuming underwriting comes back okay, this would be the plan I'd recommend for you guys. And depending on how aggressive you want to be with the house, sometimes what people do is they do like a 20-year cash back, get their money back in 20 years, and then they pay off their mortgage early. Exactly. And that saves you all that money and interest that you would have been paying. Instead of having to make extra payments, you just put it into this instead. So you're covered if something happens. And then if nothing happens, you still get to pay off your home early, which would have done the same thing as making extra payments anyway. But instead, you're also covered.
What if we were to sell the house in 10 years?
Yeah, so the plan's portable, so it goes with you because you are actually the one getting insured, not the property. So even if you guys were to move, it kind of acts like life insurance that way, where it's on you, David, not specifically just the house or the mortgage. So yeah, so it's a totally portable plan. It goes with you, and at the end of it, you get your money back. Which, young person to young person. Because again, I'm 27. This is the plan that I have on myself because why pay for something I'm not going to use, right? It's there if you need it, but if you don't use it, which is most likely, you're going to get a nice chunk of change in your, depending on how long you go, 40s or 50s. So, does that kind of make sense?
Yeah, it does.
Cool. So I'm going to kind of go over some numbers here with you. And just so you know, the cashback plan, you would think the longer you have it, the more expensive it is. It's actually the opposite for cashback plans. Because they're giving you your money back, the shorter you have the plan, meaning the sooner you get your money back, the more they charge you for that. So like a 30-year plan is actually cheaper than a 15-year plan. So if you're one of those guys who's like, well, shoot, I'll just take the coverage and get it back in 30 years, and that's the cheapest price. Awesome, we can do that. Or if you're like, no, I would definitely want it back to pay off the home, we could look at like a 20-year plan or something. So, but just to give you an example, let's split the difference here. I'll show you 25 years. This will take you to age 50.
Okay.
The month, I like to look at it as a savings account. So the monthly savings, what you're going to be putting into it every month, is $91 a month. And if you do the math on that, if you pull out your calculator on your phone, let me know when you have it pulled up.
Okay.
All right. So 91 times 12 months in a year is 1,092.
Yep.
Times 25 years is 27,300. So if you get cancer, heart attack, stroke, permanent disability, or death in the next 25 years, the entire home is paid off. The 135 comes in. And if absolutely nothing happens and you live a normal life, you're going to get a check in the mail for $27,300 at age 50.
Wow.
So, yep. So that's an example of a 25-year plan. If you want your money back sooner, costs a little bit more. If you're okay waiting another 5 years, it costs a little bit less. For Michaela, we could look at that too, but the fact that she's not working, I probably wouldn't recommend a cashback plan just because they are a little bit more costly compared to just like regular insurance. And with just the one income in the household, I don't want to strap you guys down too much with too much insurance and not enough being able to go towards the house, the baby, things like that.
Yeah, we would probably just insure me.
Mm-hmm.
Certainly, at least just insure me with the higher plan, more expensive plan. I mean,
yeah.
So is it the same payout at the 30-year and the 15-year mark, just broken up differently?
Just about almost dollar for dollar. So let's do the math together. Ready? So the 15-year, if you want to get the exact price for 15 years. It's 184 and 69 cents, 184.69 times that by 12, and then times that by 15, and it's 33,000. So you actually do get a little bit more money back if you did 15 years versus 25 years.
All right. So are there any instances where I don't get the house paid off and I also don't get a check for $20,000 or $30,000?
If you cancel your policy. So let's say you're 3 years in and you cancel it for whatever reason, then you don't get your money back. And if something happens, the home isn't paid off. So the only way you wouldn't get it, like the only exclusion, I guess, is if you cancel your policy or suicide within the first 2 years. Which hopefully that's not even in the realm of possibility. But those are the only two exclusions. As long as you keep this policy active and you keep paying on it, it's one or the other. Either you file a claim and you get the 135, or nothing happens and you get a check in the mail automatically sent to you.
All right. I mean, this seems like a really good deal. I don't.
It is because you guys are so young.
Find the cracks in the.
The crack is you guys are so young, and that's why it's such a good deal. I show the same plan to a 45-year-old, and it costs them $550 a month, and they kind of hesitate for a second, right? And they're like, damn, that's a lot. And I'm like, well, you're not 25 anymore. So as a 27-year-old to a 25-year-old, this is the time to get this, and it's portable as well. Let's say you guys, maybe 5-10 years from now, like you're saying, maybe you guys want a bigger home. You could also get more coverage if you wanted to. The 135 is just what I showed you because that's how much your current mortgage is. But maybe you want to do, your mortgage plus 1 year of income, right? So maybe you want to look at 135,000 plus an extra 50,000. You look at 185, right?
Hold on, our mortgage is a little bit higher than 135. It's 163.
Oh, you're right. I don't know where I got 135 from. I misquoted you. I was showing you the numbers for 135. So.
All right. So let's recrunch the numbers. What's a 25 year for 135?
Well, that was for 135. Let me show you now the actual.
163.
Yeah.
Now we're getting me confused.
My bad there. I don't know where that 135 came from, but so I'm pulling up 164 because I see your exact mortgage is 163,953. So I'm just rounding up to 164. So 25 year 164 is 108.91. 108.91. Times that by 12, times that by 25, you're getting back just shy of $33,000 in 25 years.
108 a month, get that all back. That's a little under 33.
Yep.
The 25-year mark. What's the 20-year mark?
20-year mark. The monthly is 151.82. Times that by 12, times that by 20 is about 36,000 and change you're getting back. So it seems like the sooner you get it back, you are getting a little bit more back. The sooner you get it back. So 20 years is 151.82. 25 years is 108.91. At this point, when you're 45 versus 50, you probably won't notice the difference in the check. What's most important as, a new dad, new homeowner, is which one you can keep up with. So if you can keep up with 150 a month, no problem, and put that into a quote unquote savings account, then do it in 20 years because you're going to thank yourself when you're 45, right? If you're uncertain if you can keep up with the 150, then at least do the 108. And that way you'll know again, the only way you lose in this is if you cancel it. That's how the insurance company keeps the money. Other than that, they're either giving you your money back or you're filing a claim. And the way they make money on these plans is from people who get in over their head and cancel. So I don't want you guys to do that because that helps no one. So 150 a month into a savings account, does that make financial sense, or do we need to adjust that a little bit?
Yeah, we're kind of kicking it around. We're leaning towards the 25 year for 108.
Okay. So nice thing is that's why you guys do have those 30 days to make adjustments. If you guys are leaning that way, if that's what your gut telling you, I say let's try to get you approved for that. And if you do get approved, then you got 30 days to crunch numbers, budget, talk about it. And if you do want to change some things, then you give me a call within 30 days. We make adjustments, but if you didn't change a thing, you'd at least be good to go for that 25 years. So
let me ask a question about it. So let's say we go 20 years, 25 years, whichever one we go with. Mm-hmm. And after the 25 years, we've gotten our check back in the mail. Mm-hmm. And then freak accident, I die. What happens?
After the 25 years?
Have our check.
After the 25 years, you mean?
Yes. Mortgage is still not paid off. I got 5 years left on the mortgage, but I've made the 25 years of the plan. Well,
in theory, in my brain, it's up to you what you do with your money, but in 25 years, you're probably going to owe less than $33,000 on the house. I would just pay off the house at that point. You could be 50 years old and have a completely paid off house that with inflation and stuff is probably going to be worth $300,000-$400,000 at that point. Who knows? But it's up to you what you do with your money. If something does happen to you, your policy is technically done. You got your money back. So unless you set up some other life insurance when you're 50, then nothing would come in, right? But most people just pay off their house early. And it just, my opinion, it just makes too much sense not to do that, because you could,
sure.
So it's up to you what you guys do with your money, but shoot, and basically you guys are planning to have your home paid off 5 years early without ever having to make an extra mortgage payment. So, some people say, oh yeah, make an extra payment a year kind of thing, but you take that exact same math, right? Exact same math is at $11.50 a month. So this exact plan, 108 times 12, what's 108 times 12?
That's 1,200.
There's basically your extra payment a year, but now instead of like not having coverage during the whole time, you have coverage during the whole time as well.
Yeah. And if we pick the 25-year plan, that's 25 years where if something happens to me, the house is paid off.
That's right.
Or the 15 or the 20-year plan where there's a bigger gap.
Yep. And if you do the 25-year plan, let's say something happens to you 15 years from now, right? And you're not going to still owe 164. You may only owe 50,000, but Michaela is still going to get the full 164. So then she could pay off the rest of the 50,000 and have a paid off home.
Entire principal back.
You get the full 164 all 25 years if anything happens. It doesn't go down over time. So today, day one, it's just the mortgage, but you fast forward 10, 15 years, now it's mortgage plus a year of income in 10, 15 years, as you pay down your house. So what I'd recommend then, if you guys are like palatable with that 25 year for the 108, what I'd recommend, because all this sounds good, but if you come back and you get declined, none of this matters, right? So I don't want to get you like too excited about something that you may not be able to qualify for. So application, like I said, takes 8 to 12 minutes. Couple quick, there'll be a couple questions on it and we'll go through them together. If you do get approved, I should know right away if you're approved or not at the end of the application. And if you do, that's great news. First draft will come out in 1 to 3 business days, and you get a policy in the mail in about 7 to 10 days to review. And then that starts that 30-day timer if you did want to adjust it down to the 20-year plan or just keep it at the 25. But let's at least get this application submitted to see if you can even get approved for this. That way you guys have something to sleep on and think about. So does that sound fair?
Yeah, let's put in the application for the 25-year plan.
Cool.
At 108.
Cool. We'll go ahead and do that. One other thing I wanted to just throw on the table for Michaela specifically, just because I know we haven't talked about her, I don't want to think I'm ignoring you, Michaela. But but if something did happen to you tomorrow, it probably would not be a heart attack. It probably would be an accident. To get accidental coverage on you, so it wouldn't pay out for natural causes, but accidental for the full mortgage would be $15 a month. So that's always a fallback. If we want to take care of David first, let's do that. He's the higher priority. But Michaela, if you want to get a little something on you that doesn't break the bank, we can cover the full mortgage for you for accidental death for $15 a month, just so you know. Okay. So just put that in the back of your head, but we're going to take care of David first. Okay.
Okay.
All right. Yeah, sounds good.
And then what's your ballpark, your height and weight, David?
Oh goodness. Height is 5'11", weight is 300.
Okay. Gotcha. And then what's your best email address? Okay. 1 second, just get into the next page loading here. All right, and then, okay, and then in order to verify your identity and pull up your medical records, what is your social? Okay. Next page. Oh, still loading. Sometimes I work faster than the computer does.
That's always good.
Yeah. Hey, David, go pull up your email real quick. You probably just got an email in the last like 5 seconds, and it's going to ask you for, it's going to have an authorization code in there. Just need you to read that back to me.
Okay, 187375.
Cool. God, I love working with young people. Try explaining that to my 79-year-old client. Well, what's the password to my email? I don't know, Margaret. Like, it's your email.
That's good.
Yeah. I'm telling you, I see it all doing this. It keeps me young, I'll tell you that. So, okay. All right, so right now it's doing its little pre-check. So I have zero control over the pre-check. It's a pass-fail system. If the pre-check comes back okay, then I have control over the rest of the underwriting questions, but I do not have control over what this pre-check says. So this is the cross your fingers moment. And then, by the way, no DUIs or anything, right?
No.
Okay, gotcha. All right, pre-check came back okay, so that's good news. So it doesn't mean we're approved yet, but it will let us continue on with the application, so that's good. Okay. Sometimes people get knocked out right there in the pre-check and they get mad at me and I'm like, dude, it's not my choice. Like, I'm sorry. No control over that. All right, the exact draft, if you get approved, you want to write this down, will be $108.91. And the recurring draft date is the 14th of the month. If you ever need to get that changed, you can just give them a call. They're happy to work with you because they want your business, but that is just how it's automatically set up, just so you know. Okay. All right. A couple questions for me as the agent. Okay. Said no, yes, yes, yes. My phone number and email will also be on the application, but obviously you guys, actually write down my phone number now while we have a second here.
Sure.
702
702
622
622
5640. Okay. And David, you know that fancy email address from earlier?
Mine?
Yep. Pull that back up. You're going to see another email just like the one you saw 12 minutes ago with the new authorization code to apply your electronic signature.
What's my password? All right. The authorization code is going to be 187375.
Okay. Just so you know, that is oh, that code does not match. That might be your old email. Try to refresh it or check for a new email.
Sure.
Come on, Margaret. Do you know how to work your email?
The screen is black. I don't see my mouse. So I have two emails in a chain. The one was the first one you sent me. Oh, maybe that was the first email. I have one that's 492982.
Oh, 492982. Verify. Wait for it. Bingo. That worked.
Oh, man, bingo.
All right, stand by. I have to agree to the terms as well. Then we're going to get you sent off to underwriting here. So underwriting, it'll say one of three things. It'll either say approved on the spot, which is our goal. It'll say sent to underwriting for further review. And that could take a couple business days, or it'll say declined. And if it says declined, we're just going to have to get a little creative. But I'll have an answer here for you guys in about 1 or 2 minutes while the system thinks. So this is the like drum roll please kind of moment. So while that is going on, going back to you, McKaylin, variation number 21. In terms of coverage for you, did you want to look at like just accidental? Do you want to look at like some basic term coverage? So it'll still be cheaper than David's, but a little bit more than the accidental. Like, where is your head at with all of this? You should at least have a little something, but I just don't know if you want natural causes or just accidental, if that makes sense.
How much is it to include natural causes?
Let's go run a quote. By the way, David, you got approved. So you are good. I know, that's exciting. So I'm not gonna do cash back for McKaylen. Again, if you want to, you can, but it's gonna be ballpark the same price. So probably don't want to sign up for two of those right now. So, so if we're going for just natural causes, 24-year-old female, non-tobacco for the full mortgage. All right, so I'm going to give you the full range here. So I'll show you the 15-year and I'll show you the 30-year, okay? So 15-year for her is 29 bucks. The 30-year rounding up is 43 bucks. That's no cash back, that's natural causes, and that also still actually has the living benefits as well. It just doesn't have the cash back. So that would cover cancer, heart attack, stroke, permanent disability, or death, but no cash back at the end.
And that would take us up to about 150, right?
If you did
between the two plans.
If you did the 30-year, you'd be about 195-ish. Yeah. You also don't have to do the full mortgage. Just another idea, like that's the full mortgage. You know, you could just do accidental, or you could do like 100,000 instead of 164. Like, if you guys kind of have a number in mind for your budget, we can. Wait, not 195. Excuse me, about 150 because you did the 108 plan.
Yes.
Okay, so 108 plus 42 is 150. If you want to round up, 151.
What if we did coverage for $100,000 instead of the full 163?
Yeah, let's check that out. 30 years, 100,000 for McKaylen is 29 bucks a month. So combined for both you guys, 29 plus 108. I'm terrible at math. Is that 137? If I do my math right?
Yeah, that sounds right. Yeah.
Well, honestly, I might as well go for the full. Like, that's not that much different from 151. You know what I mean?
Yeah, but if you die in a freak accident in 30 years, $100,000 will probably pay off the mortgage and definitely pay for your funeral, and I'll still have an income to take care of the rest.
That's fair. It's up to you.
And that's why you do about 30 days, David. So maybe you get her foot in the door with the 100,000, and if McKaylen talks you into it in the next 30 days, you move it up, and if not, then cool, you at least got 100 grand. So I'd recommend at least just getting your foot in the door for her, and you guys got 30 days to talk over that extra little bit of coverage.
Yeah. Let's 100,000. Okay. Yeah, let's do the 100,000 for the 30-year.
Cool. All right, just locked you guys both in my phone with that 702 number I gave you. So that is my personal cell. So if you guys ever like need to get a hold of me, whether it's like tomorrow or years down the road, if God forbid we got to file a claim, I'm your guy. So you can always reach out to me. And if you ever reach out to me and I don't get back with you right away, it's not that I'm ignoring you. I'm probably on the phone with Margaret trying to help her log into her email. So you guys can always leave me a voicemail, shoot me a text, things like that. But like, I'm your agent for life. So any questions you have, you're more than welcome to go through me. And as your guys' life updates and changes, and you guys are enjoying this kid, maybe a new house down the road, maybe another kid, whatever it is, if you ever need to update your coverage, you're more than welcome to give me a call as well. And I'm more than happy to review what you currently have and evaluate if we ever need to get more coverage as well. So I'm also young like you guys, so hopefully we could all grow old together and live great lives. So McKaylen, you also got approved. So both you guys are good to go. So make sure you guys both have this written down correctly on your paper. David, you got the full 164 with cash back with Americo. And McKaylen got the 100,000 without cash back with Americo. Two separate policies, two separate payments, both of them with the living benefits. And check your emails. It may not come right away today because like home office has to approve it, but just keep an eye on your guys' email and spam box the next 2-3 days. And you guys should get your electronic version, and then just keep an eye on your mailbox for a paper copy. But other than that, do you guys have any other questions for me?
Can you think of anything? All right, and we have 30 days to amend that, adjust that as needed.
Yeah, so if McKaylin talks you into that extra little bit of coverage, you got 30 days to bump her up to the full mortgage. But if you guys didn't do a thing, you guys are totally set up, good to go, got that kind of peace of mind that you deserve.
All right, sounds good.
Cool. All right, David. Well, hey, congrats on the new home, the new baby, and pleasure working with you guys. If you need anything, give me a call anytime, okay?
I appreciate you. Will do.
All right, guys, have a good day.
You too.
Bye-bye.